How are we going to make lots of money during this crypto bull run? How do we make the right decisions on where the opportunities are and the right tokens and projects to invest in? Now, I'm going to touch on things like technical analysis because I see a lot of people in confusion or falling for the same tribes. So many new folks coming into the space fancy themselves a budding new crypto trader to be and fall for the same buying of things like TA courses or making decisions based on pattern identity because Joe Schmo Crypto Wizard says he saw a dinosaur head and shoulders pattern that definitely means the price is going to go up. Firstly, don't get this confused. TA, for the most part, in crypto especially, is astrology. In fact, even when I was on the TradFi trading floor, we called analysts astrologers. It's a well known joke in the industry and for good reason. Now, does this mean that TA is pointless? No, far from it. But what it does mean is that folks tend to confuse the use of it and how TA is most accurately utilized. To summarize, TA is a very useful tool for backtracking analysis. Pattern identification is used to categorize periods of time that are then married against other market conditions. Say, if we see, for instance, a cup and handle pattern, we know that over that period of time, we saw a bullish continuation after a temporary retracement. Very useful to streamline our understanding and labeling of that period of time. Then we take a look at the market conditions, the news, the macro and micro events, the happenings that may have caused that pattern to emerge. Then we use the information and conclusion to amalgamate with many other periods that we also label and understand to help plot a path forward as news and new events unfold. And I know this sounds obvious, but it isn't possible to expect new patterns and shapes to be drawn on a chart as a result of seeing preceding shapes and patterns being formed. That's not how markets work, and it's not an indicator in and of itself. This is why most traders fail, especially new traders. Like 99% of them fail because they don't have the teams of analysts and bandwidth to accurately take the scientific approach to how these patterns should be utilized. If you are a single person or even a small team, it's tough to micro analyze any market to great effect. You don't have the time or bandwidth to do so in anywhere close to the time you would need to be able to make those decisions at opportune times. There is a reason big banks and institutions employ so many people to achieve this. However, my point is that the more you zoom out, the more accurate TA gets. It makes sense, right? Larger macro sentiment and price movements are easier to make sense of and therefore make more accurate predictions, right? This is more of the realm in which I believe we need to be placing ourselves. You've heard people saying this, no doubt, many times. When in doubt, zoom out. This is why our community and private group make decisions in what we deem to be value plays, projects we see longer term value that solve certain pain points or integrate into new opportunities and wider bullish narratives and sector developments, and therefore have an extremely high longer term price potential with that risk of making incorrect calls being minimized as much as possible. It's not trading, it's investing. And to some, there might not seem like a big difference there, but when you boil down to it, there really is. I'm in this to make money. I can't afford to gamble on meme dice throws, and I need to put my money to work for me. I'm sure a lot of you are in the same boat. If you are genuinely interested in trading or, in learning about the trading side, my non-financial advice, of course, is to stick with the basics and understand things like reading candlesticks, support, resistance, volume, momentum. That's really all you need, or rather, all you're likely to be able to utilize without an army of folks behind you. These things can paint a narrative and help you backtrack to draw conclusions and plot more macro predictions accurately. I know that for many here, I'm probably preaching to the choir, but it's always important to remember that well known sayings like traders lose money, they're used for a reason. A few lucky guesses and coincidences to someone's use cases against hordes of probable losses and degen plays are not an indicator you should be buying their course. You don't need to buy a course in trading. You can go out and learn this stuff for free, at least to the level that you need to be at. Now, where do we see opportunities going forward? Well, we talk about emerging sectors and what we can assume and expect to be strong narratives as we go forward into this bull cycle. Sectors like AI, deepen, decentralized infrastructural networks, gaming, yeah, gaming again. Layer ones or new dexes bringing faster, more reliable, and cheaper funds movement. These are all areas that are exciting and capable of being somewhat analyzed if we zoom out enough and plot a course to wealth. The magic comes in researching these sectors and identifying what projects within them are the horses that we want to back. For this, we also have to look at their gravitas, their foundation, leadership, market integration, their partners, their community, and therefore their network effect, and so on. The same analysis that I use in my venture capital analysis. The fundamental value propositions are kind of the same. And there's a lot to be brought over from that traditional analysis, especially now as we come to a period where a lot of this institutional money is entering the market with that same mentality. So the time in which some of those big market swings could only come from lucky guesses or being in incredibly early in enough projects that you may hit one that brings you some astronomical results, they're kind of becoming less and less viable as we start entering a period of time where there are more solid value plays to be made and a lot more money to back up that potential price movement. This is a time to be intelligent about where we're putting our money. Now, it's not any secret sauce or magic recipe. It's just thorough market education and research. The great thing is that most of you don't have to do this to the same extent because there are a lot of people out here doing much of it. And your learning curve and info gathering are streamlined a great deal. That's the beauty of things like YouTube, for instance. Anyway, I hope this helps. Please do like, sub. Feel free to join our private group. There are a lot of solid folks in this space. Go on Twitter, check them out. There's some really good folks giving some really great advice who can bring a lot of value. Joining groups and networks are huge when it comes to staying relevant and helping to analyze market narratives and sentiment plays. I myself am a part of a lot of groups, both in the real world, in the online space. All that information is very, very useful when you amalgamate with you doing your own research and applying some intelligent thinking and smart investment strategy to your overall portfolio. There's some great opportunities here for everyone. And there's no easy way around it. You kind of have to become as learned as you can, or at least find someone that you trust that you can almost lean on. But I would always advise doing your own due diligence and research, of course. But I hope this helps, folks. And I will, of course, as always, catch you on the next one.